Hello, this is Carlene LeMay with C2 Accounting, and this week I am here to talk about 5 epic tax mistakes or myths that befuddle, confuse, trip up small business owners. Um, C2 Accounting focuses on management accounting. We really strive to educate small business owners about using their finances to actually manage the growth of their businesses, no matter how small it is. However, as soon as someone finds out that you are an accountant, the first question that you're asked almost always is a tax question. So I've compiled a list of some of the most common tax questions that I get that are usually wrong. They're myths. They're these things that float around in the small business world that everyone believes is true because someone told them, but usually they're not. So let's just jump right into it. The epic tax myth number one is that there are magic deductions that tax preparers know about that small business owners do not. I had someone says who I was preparing a talk and I asked for some suggestions of what people wanted to hear about. And someone said, let us know what deductions there are that we don't know about. And the simple answer to that is that there are none. I say that if you have a business and you have expenses that are used to run your business, that are used in your business, any expense that you have related to the operation of your business is a business expense and it goes on your taxes. Now, is everything going to be deducted 100%? No, not necessarily. But if you're tracking, which is key, if you're tracking all of your business expenses, tax time becomes a lot simpler. So unfortunately, there are no magic tax deductions that only that tax preparers know about. However, educate yourself, know what is appropriate for your business, and that way you're well informed. The biggest epic tax myth number two that I come across a lot is that I can write off all of my car expenses if I use my car for business purposes. That's not entirely accurate. So yes, if you are using your personal car for your business, you can write off the business use of that car. And I stress that, the business use of your car. When you're using that car to get groceries, to pick up the kids from school, to go on a family vacation, those miles, the maintenance associated with those trips, the fuel associated with those trips are not deductible. So you have two ways of deducting car expenses. There is your standard mileage, which this year I think has increased to 59 cents a mile. With that, it means you actually have to track your mileage. And there are a lot of applications out there that can make it a lot easier, something like MileIQ. Everlance is another one, and there are quite a few. If you are a small business owner and you are a sole proprietor or a single member LLC, um, QuickBooks Self-Employed might be a good fit for your business. And if so, QuickBooks Self-Employed actually has a mileage tracker built into their app on that you can have on your phone. So it's one less additional app that you need to worry about, but you do need to track it. The other option is for deducting your auto expenses is to deduct the actual expense. Now, that means keeping track of the gas that you're spending, keeping track of oil changes, maintenance, repairs, things like that. And there are rules associated with either method that you choose. So the best thing for you to do is to research. And you'll hear me say this a lot, research, because a lot of times you'll get bad information, especially if it's not coming from a professional. And I say, even if it is coming from a professional, just double check. People get things wrong. Tax laws change all the time, as we know. We just underwent a major tax overhaul. So it's best to double check things. And the IRS website is just a wealth of information if you're ever unsure as to what situation applies to you. Epic tax myth number three. If I put advertisement, like a logo on my car. Now everything that I do in the car is a business expense. So this kind of piggybacks on Epic tax myth number 2. So let me just rephrase that one more time. So people believe that if they put a logo on their car, everything that they do in that car then becomes a business expense. And again, unfortunately, it is a tax myth. Just like I mentioned in tax myth number 2, only the actual business portion of those miles and expenses are actually tax deductible. So unfortunately, you may be getting a lot of advertisement. Well, actually, not unfortunately. Fortunately, you're getting a lot of advertisement for your business while you're doing your everyday errands and shopping and things like that. But unfortunately, no, you cannot count that as a business expense. Epic tax myth number 4. I can write off all of my business meals. So again, keeping track is a good place to start. If you're truly having expenses, meal expenses related to your business, be it meals and entertainment, you're taking a client out, you're meeting with a referral partner, things like that, networking events, yes, you can definitely track those as business expenses. However, even though they are a business expense, and if you look at your P&L, your profit and loss statement, it'll show 100% of the expense. On your tax return, it is only deducted at 50%. Again, if you have meal expenses while you're on your books, you'll show 100% of the cost. The IRS only lets you deduct 50% of that. And even with that being said, reasonable expenses always come into play. So keep track of where you are, who you're meeting with, what the business purpose is, because if you ever get audited, these are the things that the IRS will look for. Documentation, having well-written documentation goes a long way. So this goes back to everything that I've said about the financial health of your business. You have to keep good records. And nowadays, something automated like QuickBooks is going to be your best friend, because who wants to keep manual records and things in a shoebox? And if you have to ever get audited, then you're trying to search through things. You don't want to do that. So make things easy for yourself, because if you are tracking your costs in something like QuickBooks, then you can make the notation exactly who you're with, why you were there, how many people were involved, just again to make sure that those costs are considered reasonable. And let's finally get to the big one, Epic tax myth number 5. And this is one that I encounter so many times, and it's quite frustrating because it is not only a tax myth, but it is quite illegal. People think that they can avoid paying payroll taxes by making their employees a 1099 independent contractor. Again, not only is that a tax myth, but it is illegal. The government, the IRS, has very strict rules about who is an employee and who is a 1099 independent contractor. There are, different tests that's involved, but someone actually said this to me the other day, and she works in HR, and she's going to be a guest a little later on another episode. But she says that, if this person is doing something that is integral to you making money in your business, a lot of times they're going to be considered an employee. So keep in mind, if they have physical space at your office, if you tell this person when to show up for work, how to do their job, if you're providing the tools, the computer, the actual physical tools, if you're in construction, for example, to do the job, they are your employee. And it may be very easy to say, I'll just 1099 them, but again, that's illegal. My husband and I were just talking about this last night, and he had a job a few years, well, probably at least 10 years ago. And he had worked for someone for maybe 9 months, and this person was just writing him checks, just a normal check, like out of the company checkbook. And at the end of the year, my husband asked him, when will I get my W-2? And this person said, oh, I decided to just 1099 you. Now, my husband has thought about that for a second, and he was like, okay, so if I'm a 1099 contractor, that means I have to pay my own self-employment taxes, and I probably should have been putting that away. And the guy goes, yeah, sorry, basically. And luckily, my husband knew his rights as an employee because that was never agreed to. It was never stated in his employment contract. And so he was able to get that resolved. But how many people don't know their rights as an employee and are surprised at the end of the year when they find out that as a 1099 person, because taxes were not withheld from their payroll, that they are then responsible for paying self-employment taxes on everything. And it could be quite expensive, especially if you haven't put anything away to cover it. So as the employee, be careful, but as the employer, you really, really need to be careful. This is, and I'm going to take a moment to really stress this here. When I say that it is illegal, it is illegal. The penalties associated with this is astronomical, because not only are you going to, if you are ever found that you misclassified an employee, not only do you have to go back and pay all the taxes that you never withheld, then you have penalties involved. And a lot of times employers would try to fight the IRS ruling. So now you've involved an attorney, possibly an accountant. Just save yourself a lot of trouble from the beginning and do things the right way. And just classify your employees as employees if that's the case. And if you're not sure, consult. Go to the IRS website, consult with an HR professional, ask your accountant. There's a lot of information out there, too much information for so many people to kind of ignore facts and make arbitrary decisions about something that could really impact the life and the future of their business. So I'm going to wrap up by saying, asking a few questions. I mean, have you fallen for any of these tax myths or some of the many other tax myths that are out there? And I know that there are a lot, but obviously I can't cover them all. I may not have even heard of them all, but there are a lot of tax myths out there. As I said earlier, talk to your tax preparer, talk to your accountant, do your own research. Go to the IRS website, figure out what applies to you, and make sure that, because again, it's your business, it's your, you are ultimately going to be held responsible for this, for falling for a tax myth. So, does tax time stress you out? Does the thought of kind of preparing this yearly ritual of preparing your taxes, is it overwhelming to you? I just want to stress that tax time is just one point of time in the year. Your business is being run from the entire year. What are you doing from January to December to make sure that your business health is taken care of, that you know how your business is doing, so that you're not surprised when you file your tax returns, or you're not having to request extensions because you're not prepared. If you have your books in order, it's a simple process. Of course, the more complicated your business is, the more complicated your return is. But for most of the people that I'm speaking to, the types of businesses that I am helping, these are small businesses. And by small, I don't necessarily mean someone who's making $20,000 doing Uber, but small businesses could go up to a couple $1,000,000 in sales. But depending on the structure of the business, it's, your taxes don't have to be overwhelming if you are prepared, if you are organized, and if you ask for help. There are people like myself, and then there are lots of resources available to make this whole process, the back end process of your business, a lot less daunting. So I will say that I have a download on my website, some common tax business expenses, I'm sorry, that you could download. So I will put that in the link below in the comment section. So if you're interested in downloading that, you want to find out what maybe some expenses that you have missed out on, you can go to the website, download it, and we'll be happy to get that to you. So we just wanted to say thank you for listening, and we'll be back with some more tax tips next week.